Joining us now is Wharton Professor of Finance, Jeremy Siegel. Great to have you back on the show, Professor Siegel. Do you think that's weighing on the market psychology and sentiment here that the Fed is looking to start scaling back its extraordinary stimulus as soon as September, October?
Yeah, I think it's virtually a done deal. They're all falling, into place for Powell's announcement. Don't forget, September is one of the four major FOMC meetings where a new dot plot is going to come. The major projections of the economy are going to come. And I think they very well telegraphed that tapering will begin in September. I think there's more things that are weighing on the market. I mean, we know how far we've come. Doubling since the pandemic lows is remarkable, the fastest since World War II. I would not be surprised to see a pullback. We're in a very seasonally, some difficult time, the end of August and September, and that might be compounded by the fact that we're hearing about sticker shock that many of the parents are seeing when they're trying to buy things back to school for their kids. And it's been advertised that we may see super sticker shock when Christmas comes, because shipping costs from China are up 1,000%, and that's not even talking about all the supply side disruptions. So I think that there are some negatives that are building, I think, on the market that could weigh on it in the near future.
So what's your call here? You're looking for a correction?
I would say, well, a pullback is usually defined as 5%. It's very hard in the short run to predict where the market is going. I still think the bull market is on. I mean, the most powerful thing is there is no alternative, right? The stocks, look at bonds and cash, and are not where you want to go at the present time. So, there's still value in the stock market. Earnings are going to be super, but I think if you don't beat by 20% today, your stock usually doesn't do very well. So a lot of that is built in. I think there is going to be a tax hike. I think the Dems are going to push it through on reconciliation in the fall, and that's despite the certainly political hit that Biden is taking on Afghanistan. But I think they're determined on that. So there are a few things there that I think are going to cause people to be a bit more cautious going into the early fall. But again, I don't think that any sort of major correction is on the horizon. Not with these interest rates and not with earnings continuing to be strong.
What sort of wild cards are you looking out for, Professor Siegel, that could make you think we are due a much bigger pullback? Would it be as simple as rates shooting up, or are there any other things you're watching out for?
As you know, I believe that inflation is going to be much more severe than the Fed. I think we had a little bit of pause in the consumer price index last month. Producer prices again beat. I think that was the sixth consecutive month on that. I think we're going to have some high consumer price increases that I don't want the Fed to panic and say, oh my God, now we really have to go full in. That would really be something that could certainly cause a big market pullback. But I do think inflation is going to be much worse than what the Fed actually believes. But as I've said on your show many times, stocks are still a place to be in an inflationary environment because they are real assets. So that's only going to be a worry about the Fed, not a worry about, how am I going to protect myself? Bonds, cash, CDs in the banks are just going to depreciate with inflation. Stocks basically keep up with inflation. We know that on all long-term studies.